It's official. SIVB has failed. The FDIC has moved clients' insured money into a separate account after their funding deal collapsed. And this was very much a self-fulfilling prophecy after the CEO said, we don't have a problem unless you make it a problem. Unless people think there's a problem, then we have a problem. Little confusing. Well, this failure is the largest failure of a bank that is FDIC insured since 2008, since the Great Recession. This could very easily spiral into the 2023 recession. Now, this is sparking fears throughout the whole entire banking sector. Even banks like First Republic, very well known, very well respected bank, just had earnings, phenomenal earnings. A lot of analysts raised their price targets. That bank dropped 50% at its lowest point, going from $150 down to $40. It looks like the contagion is spreading. Like a mutated virus that keeps going and going, it looks like nobody is safe. Potentially. Now, what does this mean for share recalls within AMC? As we know, there's a lot of bad lending going on to hedge funds and very risky assets such as AMC. This could very well come to an end very shortly. We're going to talk about the implications of a possible share recall and what that could do to AMC, guys. So we're going to get into that. We're also going to get into an update on AMC and all the data that you need to know. But first things first, let's dive into it. You know the deal already. Hit the like button, subscribe to the channel if you have not already. This is not the place for you. And I suggest that you click off the video because we're here to make money. We're here to spread financial information. If those aren't things you don't want to be a part of, well, like I said, this ain't the place for you. Silicon Valley Bank Financial in talks to sell itself after attempts to raise capital have failed. And this is spreading into other financial institutions. The only guys that are really not feeling to the extent of the pain that, you know, First Republic or Silicon Valley Bank is facing would be like a Bank of America or a JP Morgan, right? They're down like 2% on the day. Granted, yesterday was a very bad day in the banking sector overall. It looks like some banks are starting to go down. And the CEO of Silicon Valley Bank said, quote, there's not a problem, and I'm paraphrasing here, there's not a problem unless you make it a problem, unless people think there's a problem. And that's ultimately what happened. People flooded out of this bank, going from $300 down to $30, and the stock's been halted all day, so we don't really know where it's going to open, if it opens at all. But the FDIC has confirmed that this bank has failed, and this could very well spread into other banks. Now, the first thing banks do when shit starts to hit the fan like it is right now is pull capital in. They try to cushion themselves as much as possible. That means if you're in the risky loans, those go out first. You know, financial markets, anything they can pull capital from, they can't get rid of your mortgage, right? It's very hard to move around assets like that. But for loans to hedge funds, to be in short positions, things like that, almost instantly will get recalled when there is fear. Now, that's important. And if you can't tell, it's like allergies. I don't even think I'm like sick. I feel fine, but these allergies are insane. Nonetheless, with AMC, there's a lot of that going on. So you could very well be in a share recall kind of situation pretty quickly. Now, this would likely happen under the scenes, right, under the radar, but you would probably see an impact to AMC stock because a lot of these hedge funds are going to have to get out of their short positions if they cannot continue to keep these loans essentially backed by these large banks in effect. If these banks call back these loans, which they are able to at any time, they don't have to give a reason or a why. They can just do it. Probably going to give them a 72-hour notice, right? It's probably not going to happen instantaneously. So I think over the next couple of days, really next week, is going to be very important for AMC. Obviously, we have the March 14th vote. There's a lot of other things going on, but I do think you can get a bigger bullish reaction than not based off of some of this pain you're feeling in the banking sector, because some of the riskiest assets for sure out there that hedge funds have loans on, right? $1 billion worth of short positions on AMC is not just capital hedge funds have. Could be some of them, but some of them are using loans, right? That's typically how people operate. If you can make money off of someone else's money, that's great when you don't have to put up your own, and that's essentially what a loan is. So that is going on. That's a fact. That's happening with AMC. Now that you're getting this kind of fear in the banking sector, 4-share recalls look a lot more likely, and next week would be the time frame that I would start to expect some of that to actually happen, considering even the volatility that's going to be around this March 14th vote. Nonetheless, honestly, a pretty sad day for, and some people may not feel this way, but pretty sad day overall, because this could mark the start of another great recession, right? This could mark some serious pain for the economy. If banks go under, like they're literally going under, First Republic looks to be in a very bad spot too, and that's an even larger bank than SVB. That's not going to be good for your everyday worker. That's not going to be good for you and me. Ultimately, if you're investing through a recession, that's good, but a lot of people are not, so you'd see a lot of people obviously losing jobs, things like that. So never want to wish that on anyone. We're just here to call out the facts, and the facts are, if you thought a 4-share recall, really a forced loan recall is really what I would call it, was possible or likely throughout the last year or two, well, it's even more likely here today. And I would say it's honestly very likely, as liquidity is starting to be in question with a lot of banks. And unfortunately, I mean, the stock price does affect overall business with the company, right? For an example, if JP Morgan were to fall 50%, a lot of people panic. A lot of people want to pull out their money. So it does start to materially affect these banks as their stock price goes down, because people start to fear, and essentially you start to get bank runs. Last thing you want to see happen. Now, if we take a look at AMC on the day, down about 4.5%. AMC is still on the threshold securities list with a live short interest of free float around 23.6%. We know this is obviously a lot higher than this. These are just the Ortex estimates, right? We know that the short interest is a lot higher than naked shorts that looks to be running rampant again, as well as some of that short activity that is hidden in the option chain for next week. It's very high. It's hard to tell exactly how high it is, but it is very high nonetheless. Now, you have about 121.85 million shares that are currently sold short. Cost to borrow average of 234%, cost to borrow max of 286%, and cost to borrow minimum of about 0.5%. Now, interactive broker short availability, 101.76% cost to borrow rates, about 350,000 shares that are currently available. If you take a look at the option activity for the day, 19 orders totaling $5.44 million, positive order value of 13%. Not a huge shocker considering what is happening here on the day. It's not pretty, guys. Let's just be honest. And let me go back to that again. It is not pretty. Now, on a little bit more of a positive note, right? Because we like to acknowledge both sides here, even though there could be this 4-share recall, all of that. What is happening with the banks? It's going to force the Fed to not raise rates, or not raise them as aggressively. It's hard to see the Fed coming out March 22nd and giving us a 50 basis point rate hike, even if the inflation data comes in hot for next week on that Tuesday CPI report. And you can even see the probabilities are dropping here again. After hitting as high as 80% just a couple of days ago, the probability of a 50 basis point rate hike is 52%. So it's still more likely than not, but you are seeing that probability of a 25 basis point rate hike coming back up. Now, if you start to get more banks, if First Republic, over the weekend comes out and says, yeah, we got a problem, people are starting to pull their assets and capital, right, which ultimately creates the problem in the first place, you might start to see pause get priced into the markets. And that's not necessarily a good thing in the medium term, because then the Fed potentially gets behind inflation again, and that puts the Fed's job, which was already hard, and some would say impossible, that much more impossible. Because do you help financial conditions by not raising rates, or do you raise rates, say screw the banks, and risk a huge recession to get inflation under control? There's not really a both sides win kind of scenario here. So I think it's uncharted territories, at least as of recently, that we are heading into. Now, specifically with AMC stock, there is a lot of failure to delivers, and especially next week, that March 14th vote is going to be crucial, and I do think you're going to get that bullish reaction based off of the 4-share recall theory that I'm talking about here in this video. The notice that is usually given, right? Probably 72-hour notice on any loans that are being recalled. That will take place next week. And then on top of that, you're going to have a lot of FTDs, and you got a lot of option activity that I do think is hiding some of those short positions. So if you do get a bullish reaction next week at all, it's going to prove this arbitrage trade as being dead wrong. And a lot of people don't want to be short in AMC without that arbitrage trade. And as we do know, the court process probably not going to go quickly. That is going to be on April 27th. So that is already kicking the can down the road. And I think based off of the arguments that we have made throughout the last couple of videos, any judge is going to entertain the argument here, because it's hard to say AMC did not essentially dilute AMC Class A shares voting power, right? They sold shares to Antera with an agreement to vote for this, and basically close the deal on the vote. Like, you don't have a lot of say in this vote, considering Antera Capital owns almost 40% of the shares necessary to pass this vote. So, long story short, if you're unaware of that backstory, it's probably not going to be resolved anytime soon. We're not going to see a 1-for-10 reverse stock split literally anytime soon, right? So keep that in mind. Now, FTDs for today, for March 10th, are sitting at about 1.5 million. Starting off next Monday, you got 1.8 million FTDs on Tuesday, 2.4 million FTDs on Wednesday, 3.4 million FTDs on Thursday, 3.9 million FTDs, and on Friday, 6.8 million FTDs. So there's going to be a lot of buying pressure coming from the failure to delivers at the very least, minus everything else that we've talked about here in this video that can lead to buying pressure as well. Now, for the option activity for this Friday, for today, 176,000 calls out the money, 45,000 calls in the money, 95,000 puts in the money, and 64,000 puts that are out of the money. For next week, 31,000 calls in the money, 661,000 calls out of the money, 274,000 puts in the money, and 907,000 puts that are out of the money. This kind of option activity is insane, and I think it would be naive to say it's not hiding some of that short interest, guys. So there is that. As far as AMC on a technical basis, I don't think it really matters, to be honest, right now, given everything that we talked about, given the major events coming next week. You are under this bullish zone, call it, right? This bullish channel. You are under this, but given what is going on in the banks, I don't think it matters all too much, and you're going to see a lot of volatility. It wouldn't surprise me to see AMC shoot up, 20% next week in a single day, based off of anything that is said in this video, whether it's 4-share recalls, whether it's FTDs finally getting bought back, whether it is a short squeeze from the March 14th vote, right? A lot of different reasons why you could see a big bounce back in AMC. Alternatively, if banks don't get bailed out and this situation gets worse, well, you could subsequently fall to about $5 per share. That's going to be the major level of support that I want to watch, guys. So that is all for this video. We have a lot more to talk about in the next video, so stay tuned for that one. In the meantime, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.